Welcome to the Road to G20, where we look at issues affecting us both here and internationally. Over the past few weeks, we have spoken to ambassadors and leaders, along with political and financial experts. Today, we are talking big business, and the G20, the United States, has presented steep tariffs to the world, including South Africa, and we have entered into a period of global uncertainty. The question is being asked, how can the G20 leaders work together to make sure the global economy stabilizes and big business thrives? If big business battles and some start closing their operations, many could lose their jobs. Well, joining us to discuss this is Dr. Stavros Nicolaou, Group Senior Executive of Strategic Trade at the Aspen Pharma Group. Dr. Nicolaou, good to have you with us. Welcome.
Thanks very much, and thanks very much for having me, and good morning to all the viewers.
Now, here's the big problem. We've seen pharmaceuticals being hit by US tariffs, also policies as well, HIV/AIDS drugs. How has this affected Aspen? I mean, have you guys weathered the storm?
Look, I think firstly the impact on pharma tariffs, both real and threatened, as you put it, because there's all sorts of numbers being banged around. Those won't affect South Africa. I think it's very important to make that point of clarity. Will it affect European, American consumers? Absolutely no doubt. So I think there is a bit of a hangover effect on the sector, but we're not directly affected here in South Africa. We're not reciprocating with pharma tariffs. I think our government's position is very clear on that. So I don't expect a direct impact on South African consumers at this point in time. Of course, if the architecture changes, we'll have to review that statement. Yeah. On the donor funding, which has emanated from USAID, PEPFAR, and also the NIH, there are two compartments to that. The first is the HIV and TB programs that are supported on the ground. And I think those have been largely disrupted. I think that's very well recorded in the public domain. And then there is also the impact on our research and clinical trial capabilities in South Africa. And I think some will argue that that's even a bigger concern, because we've always held out world-class science researchers as one of the selling points of the country. Is there a direct impact there on Aspen? Also not. So it's more a country impact and how we position and package South Africa to the global investment community. We always held out these world-class scientists, the Glenda Grays, the Slim Karims, and many other names, all household names today. And I think we've got to do whatever we can, both as business and government in this country, to preserve that. And just the last point around that, we've also held out our health science faculties, our medical schools, as being world class. And this could have an indirect impact and bearing on that as well.
Okay, so that's worrying. This is very, very worrying, because what happens next, we don't know. It's a very volatile situation. Do we need to just look at other partners? And I know you also work with the BRICS Business Council for South Africa, and there's China. And I know you've been focusing on China. Is it time to take our focus somewhere else? Is there a lesson to be learned here that we've relied for too long on the United States?
Look, weathering the storm here means two things. Well, it actually means three things. I think the first thing is we need a very calm, measured, and sober analysis of this. I think we've seen all sorts of numbers bandied around, 100,000 job losses in the automotive sector. Those numbers don't really make sense to me, to be honest. And I think we've got to do proper number crunching in the country. Just very high level. We know that exports to the United States are about 8% of our total exports. And we also know that 26% of that export basket is constituted of AGOA beneficiary products and services.
Sure.
And the automotive sector is 64% of that 26%. So if you do the numbers just back of the cigarette box, I don't think you're going to get anywhere close to the hundreds of thousands of job losses. So I think the first thing is there's got to be an appeal for a proper evidential-based assessment of where we are.
But regardless of that, though, sorry to cut into, regardless of that, there is China and there are other partners. We had our Deputy President going off to Japan. Is it not time for us to look at our G20 partners and say, guys, let's trade?
Look, two things there, which I was going to add. The first thing is we still need to continue speaking to the US. They're far too an important economy for us to have this level of distance between the two countries and the two economies. So I think we have to, in some form or shape, do a deal with the United States. Now, the economic diversification debate is not even a debate for me. And we shouldn't have to have relied on a crisis to double down on our economic diversification. Now, where should this and where ought this diversification be? Not only in the East. I think we've got a very clear posture as business in South Africa that we have to trade and deal with the West, the East, and the emerging South. They're all exceedingly important. So China is one of those markets. The Middle East is a very attractive market. Saudi, Qatar, UAE, Latin America, also very important markets. So the question for me here is not whether we should be doing this. We ought to be doing this anyway, regardless of whether we have a crisis or not now. And the other important conversation is we have to also, again, analyze what our trade and investment patterns look like. So whilst we focused on China, we run a $9 billion trade deficit with China. Now, no one expects us to run a trade surplus with China, obviously. But the deeper analysis that needs to be held out here is that if you look at what we export to China, so 90% of our exports is raw materials, commodities, minerals, and 92% of our imports from China are manufactured value-added goods. So that ratio has to change somewhat. Because I think if you reimagine an economy, as we keep saying, that's industrialized or reindustrialized in some instances, then I think many of these sins go away. You're better able to buffer these trade shocks that both ourselves and the rest of the world is experiencing.
But we're not alone here. If you think about it, we've got our 30% tariffs and there's negotiations to sort all of that out. We're not alone. There are other countries who are seeing the same sort of thing. Do you think the EU struck a good thing at 15%, or do you think that's the best they could get?
Look, I think there are two approaches here. I mean, I think what no one will argue against is that the pattern of tariffs that we're seeing. I mean, Switzerland got 39%, for example. And Switzerland have an ambassador in the United States. So I think this is more about both trade deficits, but also other peripheral and ancillary policy issues, I suspect. And one cannot help but think that's the case here in South Africa. There are clearly other issues that are troubling the United States. And I think you need to navigate around those. And I suspect some of the other countries that have got high tariffs, you look at Brazil, India is at 25% now. If you have a look at those, I think there are issues beyond tariffs that have come into play, or beyond trade, I should say, that have come into play. So we need to very carefully and delicately navigate both the concerns, but also we shouldn't sign away the farm either. I think we've got to strike that balance. And I think we can, incidentally, with the United States, because if you take PGMs, I mean, platinum group metals, we're a significant supplier to the United States. So I think there are things that we can perhaps leverage a little better to strike what is a better win-win deal for both parties.
Yeah. Let's fast forward to the G20. It's in a few months' time in November. What would you like to see from the G20? I mean, we've got all this trade on the side, and perhaps by the time we get to November, all of these tariffs have been sorted out. Let's hope that we're on a steady path to growth. What else would you like to see? Because it's a golden opportunity.
As business, three things. I think firstly, you host a G20 here with the view of executing it seamlessly, and you strengthen investor confidence and perception about the country because they see you as capable administratively and otherwise. So you do want to achieve best foot forward here. That's kind of objective one for me. Objective 2 is some tangibles coming out of the work tracks, and most notably the finance one, which I think there's got to be some commendation there, because after 3 years, the finance track, 10 days ago in our country, agreed a declaration, which is, I think, a significant achievement. I think that what was dealt with in that declaration was many of the things that are hampering our growth here and our prospects, such as high debt levels, price instability, low economic growth trajectories. So those areas were all covered. I'm not saying everything was agreed on, but I think it's quite an achievement that we did agree on a declaration, because they haven't agreed one for 3 years. Now, the area of debt levels, hard debt levels, that's going to be dialed up to the heads of state, and we'll see if there's a declaration around that. So that was quite important for me, and to tick that box. Yeah. And then, because I'm in healthcare, getting a alignment on the priorities in the health track is important. And I think that has also happened. It's certainly headed in the right direction.
What about NHI, though? NHI seems to be still up in the air. We have a government pushing ahead with it. We've got some medical aid saying, no, thank you. We've seen a bit of legal action as well. Right. I mean, where does that stand in everything?
NHI shouldn't paralyse all the other things we have to do in healthcare. And the 5 priorities that have been quasi-agreed in the health track, and that they need to be formalized in the coming days and weeks, includes universal health coverage, but it also includes other things that are exceedingly important, such as sustaining regional manufacturing. Now, that's very important for Aspen and the rest of the continent. Pandemic preparedness is another of the 5 areas that have been agreed. So it's not just around universal coverage, and it's very tempting to get bogged down only on universal coverage. I know that the fact remains that there's a patient that will wake up tomorrow morning and need pharmaceuticals and pharmaceutical services, and we should never forget that. So you can get incredibly distracted and focus on areas that are not addressing that patient's need tomorrow morning. Sure. So I think we're very clear that in parallel to all these conversations, you still have a business to run, patients that need to be serviced tomorrow morning, and you've got to be patient-centric in this business. If you're not, you're going to fall flat on your face, unfortunately.
Dr. Stavros Nicolaou, thank you so much for joining us on Business Day TV. Really do.
It's a great pleasure being here.
Thank you. Thank you. Many thanks to Dr. Stavros Nicolaou, who's the Group Senior Executive for Strategic Trade at the Aspen Pharma Group. Businesses operate in uncertain times at the moment, with the US imposing tariffs on a number of the countries that they trade with, and the global economy under pressure as well. These are things we need to talk about. The question is, will the G20 be able to navigate through these troubled waters and show that they are unified in building each other? So keep following us on our social media as we keep a close eye on developments in the run-up to the G20 summit in November. The G20 finance track, as you heard, has managed to find consensus on several issues so far, and it's hoped that the summit will be highly productive. Until next time.